What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm diving into a company that is in the consumer beverage sector, also maybe viewed as a defensive stock, right? A company that basically consistently earns its revenue and does business regardless of what the economy is doing, right? And the name of that company, Coca-Cola Company, ticker symbol KO, listed here on the New York Stock Exchange. As you can see, late 1800s, the stock has been, well, the company has been around for quite some time. And the one thing I want to show you year to date, up a little over 7% if you bought this when the bull dropped last year. So as we saw, a lot of brand name companies have been selling off. Coca-Cola, up 7%. Phenomenal, right? So the first thing I notice here, first of all, stock right here, 63.57, down 1% on the day. The 52-week low, 54.02, 52-week high, 67.20, right? So the one thing I noticed there is that this stock right now has a very, very tight 52-week range, right? It has since bounced. If we pull up a 5-year, again, was rising to about 60 and then dropped into like the mid-30s back with the lockdowns, and has since rallied and maintained its level. Now, the couple of things I noticed, first of all, if we switch over here quarterly, you can see slow and steady increases, right? 10, 9.5 billion, back up to 10, 11 and change, right? Killing it. Nice, healthy income off of that revenue. Switch over here annually. Again, slight bounces around here in 18, good rebound in 19. We get locked down, but they still do decent business. And then 21, they come back with a phenomenal year, right? Now, look at this revenue. 38.6 billion, right, for last year. Now, if we switch over here quarterly, again, this quarter for December, I think, is they're posting in like January or February or something. So we don't have the last quarter for 22 yet. However, revenue, 10.5 billion, 11.3, right? So what? We're up to 21.8 billion. Another 11. So now we're up to 32.8 billion, right? Last year, 38.6 billion. So they need to do at least 6 billion in revenue for this last quarter to surpass the total revenue that they posted in 2021. Now, as you can see, if they're doing 9, 10, 11 billion in a quarter, chances are they're going to post probably north of 40 billion for 2022, which of course will be up here and just consistently show to shareholders, to investors, to analysts that the company is still rocking and rolling and growing its business, growing its numbers. Definitely nothing to sneeze at. However, 40 billion in change, market cap 275 billion, right? So they're trading what, like 8 times total revenue and change? That can come down a little bit in my opinion. We got a PE of about 28. Again, that can come down a little bit, but good dividend yield here, 2.75%, right? So this is a company, you're going to buy it, you're going to hold it, you're going to tuck it away, you're going to collect those dividends. But I want to switch over here to TradingView because, again, I admit I am not the best guy with technical analysis, but, if you pull back here, look at this all. I just pulled up an all chart, and, again, you can say that this company is potentially in an ascending wedge. And it makes me laugh because look at this. This is the low of 87, right? And, maybe it's just what I want to see. But also at the same time, I mean, even if you bring it back down here to the lows back in the 80s, right? I mean, look at that. This is basically, a 10, 15, 20-year ascending wedge that has just been lining itself up. I'm seeing some tightening here in the last couple of years, and again, I'm not being bearish on the company, right? I'm not beating up the company. We just looked at the numbers and how it's been growing over the quarters and over the years. So if you have the opportunity to own shares of a company like this, in my opinion, I strongly advise you to do so, right? Because chances are they're not going anywhere. They're going to continue to grow their business. And, shareholders are going to benefit. They pay you to own the stock, right? But basically what I'm seeing here is if we have, first of all, again, this was the lockdown. And as you can see on the top of the screen where it says open, high, low, close, you can see the low about 36.25. right? So as soon as everything got locked down, they immediately dropped this down to 36 and change, right? So if this does break a bullish trend, or if they potentially miss earnings around here, as you can see, it's like February. You could potentially see a drop down to like the low 50s here, this fib level, and that does seem like a big drop. However, that is actually kind of close to its currently established 52-week low, and of course it will most likely bounce off that level healthily, like it does after every big drop that it dealt with over the years. So again, if it does pull back slightly to 53.57 or even 43.57, right? Yeah, if you're a long-term holder, that might really suck in the short term. However, that is a buying opportunity in my opinion, because if you look at the financials just very quickly, first of all, over the quarters, right? One bad quarter, but this graph looks phenomenal. And of course, annually looks even better, right? But we switch over to the financials. Switch over here annually real quick, and I just wanted to show you. See the PE, you had that one breakout year, but the PE has been high 20s, low 30s once or twice, now sitting at 28 and change, right? Price to sales slowly rose over the years to north of 7, slightly pulling back 6.5, right? Let's wait for that to come down to like 5.5, right? That's the point I'm trying to make. Pricing and timing. Price to cash flow, basically been maintaining itself. Big increase, well, not big increase, but slight increase from last year at 20 and change. Now it's at 24 and a third. The price to book is what catches my eye, right? Because it rose over the years, now trading over 12 times book value, which at 63.5 a share translates to what, like $5 a share. Right? So on one hand, it's like, are they doing good business? Should they grow in value? Yes. On the other hand, are they overvalued? Should they pull back? Yes. In my opinion, right? So is it going to pull back to $5? No, probably not. But like I was saying, at 63.5, if it pulls back to 53.5 or 47.80, yeah, not only is it justified, but it'll be a beautiful buying opportunity for you. And if we check the profitability ratios very quickly, you can see single digits bouncing around up to double digits, pulled back, and has recently reclaimed that double digits. The return on equity was in the 20s up to the 30s, and then just basically exploded into this 40% range here, having a slight pullback from last year. The return on invested capital has seen a slight increase from the previous year, from high 15s up to north of 16.5%. Gross margin percentage has slightly pulled back 1 percentage point from the year before, but has basically maintained that 59 to about 62% range. Operating margin, same thing, has now pulled to over this high, which is 2018, and is now sitting at 29.7%. The EBITDA, once again, earnings before interest, taxes, depreciation, amortization, has been, my apologies, has been maintaining this 31-32% range, and is since up 1% from last year, going from 31.3 to 32.5. And the net margin percentage, we looked at the profits before, have been increasing for the most part year over year consistently. Last year 25.2, right now 25.3. Nothing to write home about. However, these are healthy numbers. But I don't know, something about this long-term chart just really caught my eye. And anytime I've seen things like this, it's like, you say to yourself, like, oh, that's like a rising wedge. It could pull back. But then you kind of like question yourself, and you're like, well, we're looking like over the course of like 20, 30 years. It's a kick-ass solid company. It's probably not going to happen. And then when the market's beginning to have a big sell-off, right? These are the companies that pull back. Because again, as we can see, this is September, October of last year. No. Here we go. September, October of this year. You can see the stock pulled back to mid-low 50s. Right? So that's what I mean. In the short term, if it pulls back to the 50 range, it's definitely a buying opportunity. But in the long term, right, if we turn around, now right here we're looking at what? This is 2024, right? So it might take a year and a half, 2 years. But I do have a feeling that it will hit this apex and potentially have a big pullback to the 50s and potentially mid 40s. And obviously, in my opinion, if I had cash on hand and that opportunity did present itself, I would jump all over that baby like white on rice, right? Because, hey, it's Coca-Cola. And again, if I liked it at, 60, 63 and a half, I'm going to like it at 53 or potentially even 43. Just a quick move over here, and I'll let you guys go. Here we're looking at the daily and stock charts. RSI around 57. The stock recently hit the top Bollinger Band and has since pulled back and closed right at 63.57, which is the mid Bollinger Band, 63.57, right there on value. However, since the widening here on the pop, and then basically, I don't want to say it's flat, but, hasn't been too volatile as of late. You can see the tightening of these Bollinger Bands now. Top one 64.5, bottom one 62.67. But of course, you have the moving averages. We have our 50-day has now curled to 61.07. Our 200-day is now 61.06. So in the immediate short term, this is probably going to be your new support level. MACD slightly pulling back day after day. Switching over here to the weekly again, big bounce here off of the volatility in the market, September, October. Bouncing up from 53 and change up to 63 and change. And again, we just looked at 61.067. Now this 50-day moving average on the weekly, 60.88. Mid Bollinger Band, 60.30. So that right there, in my opinion, is going to be the range. Right there, that 60 range. So if it breaks that 61.0607 that we looked at on the daily, and it starts pulling back to the low 60s here. Excuse me again, guys. I'm sorry. But right here, this mid-range, this 60.30, that's going to be your mark, in my opinion. Because if it does close below that mark and enter into that bearish trend, you are going to see a pullback to these low 50s. But hey, this 200-day moving average, look at this, a couple of years ago, it was 41, now it's 51.5, right? Phenomenal. That's what you like to see with an investment. And of course, that's going to help add a new support level for you, right? Just in case it really begins to sell off. So that's why I always say, great company, we like it at 63, we would love it at 53, right? So that, when you look at a company like this, that, in my opinion, is what you want. You just want a better entry. Not necessarily that it's not a buy or, don't think about buying it or wait till next year. It's not anything extreme like that. Just wait for the slight pullback. Wait for that slight sell-off, right? We looked at the numbers. We looked at the book value. It has the potential to pull back, even though they are rocking and rolling. If you're looking for a shorter-term trade, again, we can pull back to here. When are these earnings? There you go, like the first week of February, right? So you have what we'll call it like 6 weeks from now, right? So if you're looking for a shorter term trade, I would give it a couple of weeks. I would see if it can pull back to potentially 60 or even break and get back into the 50s. And then, in my opinion, if you want a short-term trade, I would potentially consider stepping in at those levels and trying to ride the wave going into next quarter earnings, which again, February 9th, after the ball dropped. And that's for the last quarter, December 2022, which is going to give us a little bit more, the last piece of the puzzle for the big picture moving forward. But yeah, I'll leave it there. Just wanted to give you my 2 cents on Coca-Cola. I'm sure some people agree, some people will disagree, and that's what the comment section is for. So if you have any questions, comments, or concerns, drop it down in the comment section. Just like everyone on YouTube says, if you like the video, give it a thumbs up, helps out the algorithm. If you like the video, subscribe to the channel. But more importantly, again, I know markets are uncertain and it really stresses us out. But hey, holiday season, the bull's about to drop, right? And what did they say? Grab a Coke and a smile. Ha! Look at that. Free Coca-Cola advertisements. They're not even paying me for it. You're welcome, Coca-Cola. So, keep your eye on the prize. Stay level-headed. Try not to get too stressed out. All you guys watching, you and your families, wish you health and happiness. Thanks for stopping by. I'll see you guys in the next video. Take